Aether is a brand new altcoin. It has only just recently been launched, and it is one of the most hotly anticipated launches of 2024. And that's because of the success that competitors in the same niche have seen. We've had the likes of Render do really well, the Akash Network do really well. And that means, of course, I am talking about the decentralization of cloud computing infrastructure. And that is where Aether hopes and aims to be. And with a claimed 20 times more GPUs than Render and 45 times more computing power than Akash Network, does Aether and its new ATH token stand up as a good investment case? If you enjoy the following analysis on Aether and the ATH token, hit the like button down below and please subscribe to the channel if you would love to see more videos like this. And of course, if you don't want to miss out on any videos, hit that bell notification icon too. And if you're struggling for somewhere to get insights on the best optimum entries and exits in this crypto market, that is what I try and help people with inside my 80/20 crypto newsletter. So if it's of interest to you, the link to that is down in the description below. Now, with all of that out of the way, let's take a look at Aether and the all new ATH token. Now, Aether, as I've already mentioned, is all about decentralizing cloud computing infrastructure, but it's actually a deep-in protocol, so decentralized physical infrastructure network. And that's because of its architecture, which we'll get to very briefly. But what is important to know is that with the onset of artificial intelligence, the demand for GPU power has been constantly increasing, but only a handful of organizations hold the majority of GPU power around the world, and there is a growing need for decentralized alternatives. Therefore, Aether wants to form a decentralized network of GPU hardware located all around the world that individuals and enterprises can use when required. They can rent those services. So individuals like me or you can then help to secure that network and operate that network by operating an Aether checker node, which checks the activity on the network. And it's that checker node that means that this is a deep-in product. You can buy and go out and buy a checker node. That keeps the activity and the operations of the Aethir network working. And therefore, people all around the world can access GPU processing power from wherever they might be located. And we can see here, it says that they have 43,000 enterprise-grade GPUs on demand, some of which they hold in partnership with NVIDIA, which is interesting. 23 countries around the world are supported at the moment, and they have an uptime of over 99%. Now, with this decentralized cloud computing power, they have targeted two niches in particular. The first is AI. So they want to help companies achieve unprecedented AI scalability. And to do that, Aether's AI cloud, which is called Aether Earth, is a cloud infrastructure designed to test, launch, and help AI models to scale. So if you are an AI developer and you don't have access to the GPU processing power that you need to run your models, you could turn to a service provider like Aether in order for GPU power to be accessed. And then the other niche that they are going after is the gaming niche. So these guys aren't just targeting AI, they're also targeting gaming, so enabling gaming without limits. And what's important to know here is that Aether's gaming cloud wants to help developers remove the current constraints of games publishing, also the constraints around early game testing, and a range of other gaming operations. So it wants to provide the superior cloud gaming platform, optimizing for low latency, and, as I've already mentioned, unrestricting game publishing. So anyone that needs GPU processing power, whether in the AI or gaming niche, they can tap into Aether's network, and the infrastructure will then distribute what's available. Now, usually at this point in the video, I would talk about a project's history, but Aether is such a new project, it doesn't really have a lot of history. It's a project that's been in the pipeline since 2021, and it was founded by two guys, Daniel Wang, a leader in the Web3 and gaming space, and also Mark Ryden, who has had experience in the field of AI. Now, with the launch of Aether's native token a short while ago, that now means that businesses and enterprises are now free to start renting some of Aether's resources. So the true test for this project is now about to begin. But even without any working products, it has an impressive list of backers, including the likes of Animoca Brands, Merit Circle, Gate.io, Bybit, which you can see on the screen scrolling here, impossible finance. And as I mentioned earlier, it has also established a partnership with GPU manufacturer NVIDIA. So some of the GPUs that are located around the world are provided by NVIDIA, and we all know how well NVIDIA has done over the last 12 to 18 months. Now, Aethir's native token, as we've already mentioned, is ATH, and it has 4 main utilities. The first is transactional, so it's used as a medium of exchange. Then it's used as a diversified application. So it's beyond its application in AI applications. ATH finds use as the ecosystem grows. So within the introduction of merge mining and integrated marketplaces, the ATH token will continue to grow in use cases. So it's basically just saying that they plan to expand the use case of ATH. Then we have the governance and participation. So as Aether moves towards establishing its DAO, the ATH token will be used, much like other projects. And then finally, we have staking. So node operators wishing to contribute to the network are required to stake ATH. Now, over to CoinMarketCap. And we can see that at the moment, the price of ATH is around the 7 cents mark, just under 7 cents, with a market cap of 260 million, which means that it is still technically a low cap altcoin. However, despite a 260 million market cap, its fully diluted market cap is nearly $3 billion. And that's because only a small percentage of the circulating supply is out there right now. 9% of the total supply, I should say, is out there right now. So a circulating supply of 9%. Which is 3.7 billion out of a possible 42 billion ATH tokens. And as we can see, it was only launched back on June the 12th, so it hasn't had that long in the market, and so far it hasn't really done anything. We had a lot of hype after it launched, and then it has been ranging, if anything, trending down a little bit since launch. And so we come to the upsides and risks for the Aether project and the ATH token. What are the things that can drive the price of ATH higher? And equally, what are the things that could strip and retrace and cause ATH to lose all of its value in the future and become another redundant crypto project, which no one wants to be holding? And starting with the upsides, the development of artificial intelligence is growing incredibly quickly right now, which means that the necessity for GPU power needed to support these AI-focused projects is growing equally as quickly. So there is a growing demand for GPU cloud infrastructure providers such as Aether. And if that wasn't enough, Aether is not only targeting AI, but it's also targeting gaming, which is another industry that has seen a massive explosion, an exponential explosion of users over the last decade. So unlike other competitors in this decentralized cloud infrastructure provider niche, Aether is trying to win on 2 fronts, AI and gaming. It's not just focused on AI, which a lot of others are. And finally, there is no denying that this project has an incredible amount of hype behind it. As we know from history, hype can push a token's price a heck of a long way. The launch was hyped by many influencers that are out there. I've seen Aether being talked about on YouTube consistently, Twitter consistently. So its social standing is very impressive. And for example, we're on the Twitter page right now. It has over 800,000 followers, 880,000 followers on Twitter. And if we compare that then to the likes of Render, which has done remarkably well over the last 12 to 18 months, but that only has 190,000 followers on Twitter. But then we have the risks. What are the risks that could drive the price of ATH much lower and make this a bad investment in the long run? Well, competition has got to be up there as one of the toughest risks, or one of the most obvious risks in this area. The list of decentralized GPU cloud infrastructure providers is growing. Render, Akash Network, Octaspace, IONET, and now Aether. There's more as well out there. But the list will continue to grow because this opportunity, the opportunity of AI, the opportunity of providing GPU power is so attractive. Therefore, to come out ahead, Aether needs to navigate all of that competition. Another major key risk of Aether over the long term is the number of unlocks ahead for this project. So the internal team, as we can see here, has an 18-month cliff for vesting. Then we have airdrops. So we've already had the first airdrop. We'll have another airdrop in 8 months' time, and that will mean that the supply of Aether will double instantly, and it will go again in 8 months' time after that, so in 16 months' time. So there's going to be 2 major unlocks coming up relatively shortly. Then we have ecosystem development. So 50% was given at the token generation event, and they are being vested in a 24-month linear period. DAO, 48-month linear period. Investors, so inside investors, have a 12-month cliff. So after 12 months, next June, there will be a big influx, could be a big influx. After that, 24 months is a linear vesting period. And then we have the checker notes, which have 4-year linear based on performance guidelines. So 4-year linear vesting period there. So there's a huge amount of ATH to be coming onto the market over the next couple of years. So this isn't one that you likely want to be holding as you head into definitely into the next bear market, because this will just get absolutely eaten alive by the amount of supply that will come onto the market. And we've seen it in previous projects. You'll just see the price of Aether crash and crumble. And with so many token unlocks to come in the future, that is why the fully diluted market cap of Aether is now almost as high as Render. Now, if we type in Render and see where its fully diluted market cap currently sits, Aether has a fully diluted market cap of just under 3 billion. Render is up at 4.1 billion. So not a significant 25% more or 30% more larger than Aether. So it's not a significant amount, but if you compare them like for like, has Aether achieved anywhere near the same amount that Render has achieved? And the answer to that is no. At the moment, the market cap for Aether appears to be driven mainly by hype and also the VCs that will be backing this project. And there we have it, Aether, the crypto industry's latest answer to the problem of GPU processing power. And it is a protocol that has drawn an exceptional amount of eyes to it. But because of all the token unlocks, the risk of competitors in the niche, should this be an altcoin that you add to your shortlist? As always, I save my own personal opinions for my 80/20 crypto newsletter subscribers. So if you do want my own personal take on altcoins such as this and others in the future, there is at least one a week that we go through, then the 80/20 crypto newsletter is the place to head to. The link to that is in the description down below. With the token of Aether only just being launched, it will be really, really interesting to see where the price of this one stabilizes. It's looking like it's stabilizing around the 7 cents mark at the moment. But will that be where the fundamental baseline is for this token, or will we see a spike higher in the future? What do you think? Let me know in the comments. And do you think this holds as much, if not more potential than Render? We've already seen what Render could do over the last 12 to 18 months. Is the Aether project and protocol a better opportunity? I really hope you've enjoyed the video. Thank you so much for watching, and I'll see you in the next one.